Joins us now. Randy, thank you very much for staying up for us. Well, that really is the first question. Have you been buying Indian stocks or is the increase in COVID cases deterring you?
I think that, well, first of all, thanks for having me back. Second, I hope, everyone over there at CNBC TV 18 and all of your viewers are staying safe, wearing their masks, social distancing, and washing their hands. Obviously, the pandemic's very, very striking right now in India. It's causing the market to be under pressure. The way we rate it, the Indian market right now has 6 distribution days. We'd like to see the Sensex hold its January lows. But I think until we start to get to see a stabilization and then hopefully a decrease in cases, I think the Indian markets and the economy is going to stay under pressure. As you mentioned, cases have been running about 350,000 new cases a day. That's a very large number. It does feel like the country is a little bit behind the curve right now in terms of cases and also getting the vaccine rolled out. I think that's going to lead to a lot of the economic numbers in India coming down and earnings likely to be, below what people are expecting for the year right now. I think right now it's good to take a little bit of a wait and see approach, see a little bit more stabilization before getting more bullish.
Okay, Randy, good morning. I wanted your thoughts on how to approach banks because, ICICI Bank was the big gainer yesterday after a strong set of numbers. Would you put some incremental money to work here?
I think that the story with the financials is that I think the yield curve is going to help them going forward. I think rates are going to stay low and there's going to be pressure on the central bank in India to remain easy. I think the question is really loan demand. I think loan demand is going to suffer. I think once we get a sense of stabilization, it's likely that the financials in India are going to rally, much like they have in the U.S. So I do think the yield curve is likely to steepen as we go through this crisis. But I think loan demand is really going to be soft. I don't think we have to worry about higher rates right now in India. So that should help the interest margins for the banks. But again, the question is, what's the demand in the short run going to be for borrowing?
Okay. Randy, I take your point that you would want things to, stabilize, maybe peak off before you want to buy. But this could still offer some very good opportunities, isn't it? Do you see any pockets of value? After all, it was best to buy in March of 2020. It may be equally wise to buy in April of 2021, no?
Here's what I think on that. If you look at the Indian market, it's really actually not that expensive relative to what the forward growth is going to be over the next several years. So if you look at fiscal 2022, the market's about 19 or 20 times projected earnings. Now, that being said, I think the earnings estimates are probably too high and they're going to have to come down. But I agree with you. This probably will be a buying opportunity over the next several months. I'm not sure if it's a buying opportunity today on Tuesday, but I think over the next several months, there's going to be some opportunities. And what I would really want to do is look at the leadership growth stocks in India, stocks that I feel like have a great secular story and are going to do well regardless of the economy. So a good example of that are all the outsourcing stocks. A stock I seem to talk about every time I come on your show, Infosys. They're making that transition to digital. Half the revenues are coming from there. Outsourcing continues to go India's way. Wipro, Tata Consultancy. So I think some of those big secular tech stocks are good names. I like some of the consumer names as well. I like Jubilant Food Group, which is obviously doing Domino's pizza delivery, which is it continues to expand secularly in the country. So I think one of the things I'd really be looking for is to pick up some of the more growthy names on this weakness. I think some of the more cyclical stocks are going to get hurt, and they're going to get hurt for 2 reasons. One is production is going to be under pressure over the next couple of months in India because of the pandemic, and that's also going to put a little pressure on the basic material demand. So obviously when the pandemic ends, those stocks are going to have a big rally. But I think what I'd be looking for in the shorter run is if there is a bigger dip in the Indian market, I'd be using that to get into quality growth names.
Okay. I got that. Aren't you attracted to the pharma names?
We do. We like a lot of the generic manufacturers in India. We also like the lab companies. We like Dr. Lau. We like Laurus. Obviously, the hospital companies have been doing well as well. If you look at Apollo hospitals, that's really near a high. So we do like healthcare in India. I do worry about some of the short-term demand. You know, what happened in the US at the height of the pandemic is a lot of people were reluctant to go to the hospital or go see their doctor. And so things like cancer treatments, et cetera, fell off some until the pandemic started to stabilize. And then they started to pick back up. So I do think there could be some short-term weakness in some of those. But India is one of the big leaders in generic manufacturing, and I continue to like those stocks. I think that's going to be an area that's going to, much like the outsourcing on the tech side, is going to be a big area for India over the next several years.
How about metals, Randy? I mean, that has been really the space to reckon with in the last 6 to 12 months, and we've had fresh highs on almost all, steel and overall metal stocks. Anything in that space that has caught your attention?
You know, in general, I'd be taking profits on the metals, not buying more right now, because again, I think industrial production in India is going to suffer because they're going to have less workers in the factories during COVID, and that's going to translate into some pressure on the basics as well. They've had a really big move. If I was looking to invest in basics, there's two stocks I like. I do like Tata Steel, which is a little contradictory given what I just said about autos, but they're backward integrating. That should really help their profit margins over time. I like that verticalization. So I like buying a basic material stock that's got something really specific going on with itself. The other one I like is Vinati Organics. They're a leader in specialty chemicals. I think what's going to drive that is demand outside of India in the short run, not inside of India. And though I would expect that demand to pick back up once we see a peak in cases and that COVID case count hopefully starts to come down.
Okay. Finally, Randy, I wanted to ask you, we were very gung-ho about this PLI scheme that the Indian government had announced, the production-linked incentive scheme. And there were some, electronics makers which appear to be finding investor favor. You don't like them? Dixon and Amber and such.
I do like them, and I think you have to ask yourself, the Indian government's going to have to do more to stimulate the economy as we move through this. I think we should keep out the possibility that if cases continue to ramp, there's likely to be more government stimulus, much like there was in the US. So I think that'll help. Also, I guess the other theme that is sort of tangential to that is I do, as I've said on your program before, believe India is going to be a big beneficiary as offshoring moves from China into India. I think one of the things that's happened with the pandemic is a lot of companies, global companies, are trying to diversify their supply chain. They've found they've been too dependent on certain countries like China. I think that's really going to go to India's benefit. So I agree with your statement. And I also, as I said a minute ago, would look for possibly more government incentives as we move forward out of this pandemic.
Okay. Well, thank you very much, Randy, though I don't know how much the Indian government can afford. It's not as if we have very low inflation numbers. We have about, 5.5% inflation running even now. And so to expect the government to spend more and the Reserve Bank to print money for that is a tall ask. Too many demands on the government, from vaccine to oxygen to beds to healthcare to, stimulating the economy. But that debate on another day. Thank you very much for staying up for us.
Stay safe. Hope to talk to you soon.